Welcome back to Bonnie's Life, where we decode the most important developments shaping our financial future. I'm your host, Bonnie, and today we're diving deep into what might be the most pivotal week in cryptocurrency history. The crypto market just smashed through the $4 trillion barrier. President Trump signed groundbreaking stablecoin legislation, and altcoin season is officially confirmed with XRP, Solana, and Dogecoin leading explosive rallies. But here's what the mainstream media isn't telling you. While everyone's celebrating these massive gains, over $3.1 billion has been lost to security breaches in just the first half of 2025. We'll break down exactly what this means for your investments and reveal the specific trading triggers you need to watch for the coming week. If you're serious about understanding crypto markets and making informed investment decisions, make sure to subscribe and hit that notification bell. We're about to uncover insights that could significantly impact your trading strategy. Let's jump right in. Let's start with the biggest story that's reshaping the entire crypto landscape. On July 18, 2025, President Donald Trump signed the Genius Act into law, creating the first comprehensive regulatory framework for stablecoins in United States history. This isn't just another political promise. This is a fundamental shift that passed the House of Representatives with overwhelming bipartisan support, 308 to 122. Nearly half of Democratic members joined Republicans in supporting this legislation, which tells us something crucial about the changing political landscape around cryptocurrency. Here's why this matters to your portfolio. The current stablecoin market is valued at over $260 billion, but Standard Chartered Bank projects this could explode to $2 trillion by 2028 under the new regulatory framework. That's a 669% increase driven by enhanced credibility and mainstream adoption. Treasury Secretary Scott Bessent emphasized that this framework will buttress the dollar's status as the global reserve currency and boost demand for U.S. treasuries. This isn't just crypto news. This is monetary policy that affects every investor. The crypto industry invested $245 million in the 2024 elections supporting pro-crypto candidates, and that investment is now paying massive dividends. This shows the power of strategic political engagement in shaping regulatory outcomes. But let's be balanced here. Critics like Scott Graytake from Transparency International warn that the legislation has loopholes that could make the U.S. financial system a global haven for criminals and adversarial regimes. The law doesn't prevent big tech companies from issuing stablecoins and lacks stronger anti-money laundering protections. However, industry leaders are overwhelmingly positive. Chris Perkins from CoinFund stated that the Genius Act will go down in history as a foundational step in mainstreaming crypto as an asset class. This regulatory clarity is directly contributing to our next major development. And here's the number that's got everyone talking: $4 trillion. On July 18th, the same day Trump signed the stablecoin legislation, the entire cryptocurrency sector breached the $4 trillion market capitalization milestone. To put this in perspective, this represents crypto's evolution from a speculative fringe asset class to a central component of the global investment landscape. We're not talking about a bubble here. We're witnessing institutional legitimization in real time. Bitcoin crossed the $120,000 mark earlier that week, setting a new all-time record. But here's what's really exciting. Bernstein, one of the most respected research firms on Wall Street, has issued a forecast that Bitcoin could climb to $200,000 by the end of 2025. Ethereum gained 4.5% and has more than doubled over the previous 3 months. This isn't just Bitcoin's show anymore, okay? We're seeing broad-based institutional adoption across multiple cryptocurrencies. The crypto rally has powered traditional stocks too. Coinbase and Robinhood both hit all-time highs, proving that crypto adoption benefits the entire financial ecosystem. Corporate treasury allocations to Bitcoin are accelerating. We're seeing a growing number of public companies adding digital assets to their balance sheets as long-term stores of value. This isn't speculation, this is strategic corporate finance. Darren Nathan from Hargreaves Lansdowne noted that the arrival of the Trump legislation signaled an about turn in attitudes towards the crypto industry. This institutional acceptance is driving sustainable demand, not speculative bubbles. Now, let's be realistic. The sector was last trading at $3.92 trillion as Bitcoin fell 1.8%, demonstrating that volatility remains a constant factor. But this volatility is occurring at much higher baseline levels, indicating genuine market maturation. Speaking of market drivers, let's examine who's really moving these markets through social media influence. Social media has become the primary driver of crypto market sentiment, and understanding who has real influence can give you a significant trading edge. Let me break down the current power rankings based on market impact and institutional significance. Ranking number 1 is Michael Saylor from MicroStrategy. His July 24th tweet, "Just Bitcoin for breakfast," generated massive market attention, but it's his company's actions that really matter. MicroStrategy just acquired another 6,220 Bitcoin, bringing their total holdings to over 601,550 BTC valued at more than $71.7 billion. Here's something incredible. MicroStrategy has surpassed NVIDIA to secure the 9th spot in the S&P 500, proving that their Bitcoin strategy isn't just working, it's revolutionizing corporate finance. Saylor's long-term vision sees Apple, Google, and entire nations dominating Bitcoin by 2035. This isn't just speculation. It's a roadmap that institutional investors are following. Ranking number 2 is Elon Musk. While his direct Bitcoin commentary has decreased, his influence remains substantial. SpaceX just made its first Bitcoin transfer in 3 years, moving $150 million worth of cryptocurrency and sparking speculation about strategic repositioning. Tesla's Q2 2025 results revealed they still hold 11,509 Bitcoin worth over $1.2 billion, posting a $284 million gain. When Musk stated fiat is hopeless so years regarding Bitcoin adoption, prices surged immediately. His announcement about reviving Vine in AI form caused the Vine token to surge 200%, demonstrating how his broader technology interests continue impacting crypto markets. Ranking 3rd is Mike Novogratz from Galaxy Digital. His $150,000 Bitcoin prediction for 2025 carries weight because of his institutional credibility. He's also bullish on Ethereum potentially outperforming Bitcoin, providing professional traders with strategic frameworks. The overall sentiment across crypto social platforms has been overwhelmingly bullish, with key themes including regulatory clarity, institutional adoption, and mainstream acceptance. However, security concerns are creating cautionary undertones that smart investors need to monitor. Now let's dive into the technical analysis that reveals exactly where these markets are headed. This is where we separate the serious traders from the noise. Bitcoin's current technical structure is presenting one of the most compelling setups I've seen all year, and I'm going to show you exactly what to watch for. Bitcoin is consolidating between $116,000 support and $120,000 resistance, and this isn't random price action. This is a textbook bullish flag formation that typically precedes significant breakouts. Christopher Lewis from Daily Forex confirms this pattern, stating, "This looks a lot like either a bullish flag or a bullish pennant, both of which are very bullish." The measured move from this pattern suggests a target of $130,000. Here are your critical levels. Primary support sits at $116,000 to $117,400, with secondary support at $115,724. If we break below these levels, the next major support zone is $110,000 to $111,300, where the 50-day EMA provides structural support. The RSI is currently ranging between 45 to 60, indicating neutral to slightly bullish momentum. The MACD is showing mixed signals across time frames, which suggest we're in a decision phase that could resolve explosively. Volume analysis reveals declining trends on bullish candles, indicating some demand weakness at higher prices. However, recent sessions show a 2.37% volume surge, suggesting renewed institutional interest. The flow pulse indicator shows low sell pressure, suggesting stronger underlying demand than in previous bull markets. This indicates that institutional accumulation is absorbing any profit-taking by retail investors. Here's your actionable trading strategy for the coming week. Primary scenario with 65% probability is a bullish breakout. Buy any dip to the $117,000 to $117,500 range. Add positions on breakout above $120,250 with volume confirmation. Stop loss at $115,500. Targets at $125,000 and $130,000. Watch for these bullish triggers. Break above $120,250 with volume exceeding 150% of the 20-day average, RSI moving above 65 on the 4-hour time frame, MACD bullish crossover confirmation, and institutional buying flow indicators turning positive. Alternative scenario with 35% probability involves correction to $110,000 to $111,300 if we fail to break $120,000. Never risk more than 5% of your portfolio on any single position. But before you get too excited about these bullish setups, there's a critical risk factor that every crypto investor needs to understand. Here's the sobering reality that's not getting enough attention. The cryptocurrency industry has lost a staggering $3.1 billion to security breaches in just the first half of 2025. This already surpasses the total losses for all of 2024, and we need to understand what this means for market stability. Access control exploits account for the largest category at $1.83 billion, primarily occurring in the first quarter of 2025. The Bybit exploit alone cost $1.5 billion, while the CoinDCX attack resulted in $44 million stolen without even touching user wallets. According to Hacken's forensic team, there's been a concerning shift in attack methodologies. Human and procedural errors have become more frequent attack vectors than cryptographic weaknesses. This means the technology is getting more secure, but operational security is lagging behind. A new category of threats has emerged using AI-powered attacks. Hackers are creating deepfake videos of trusted crypto leaders like Vitalik Buterin, Elon Musk, and CZ to promote fraudulent investments. This represents a sophisticated evolution in crypto scams. Hackers are also reviving dormant DeFi applications to steal crypto, exploiting abandoned protocols that still hold user funds. This zombie DeFi threat shows how quickly the landscape can change. The industry response has been swift. Major exchanges like KuCoin, Binance, BTCC, BitGet, and Bybit have all implemented strengthened security measures. However, the scale of losses raises questions about readiness for mainstream institutional adoption. While regulatory clarity has improved, operational security remains a significant challenge that could impact institutional confidence. Smart investors need to factor these risks into their position sizing and exchange selection. Despite these security concerns, we're witnessing something remarkable in the altcoin markets. The altcoin season index has officially climbed above 50, confirming what many of us have been anticipating. Altcoin season is here. Bitcoin dominance has declined from 66% to 60.6%, and alternative cryptocurrencies are beginning their explosive outperformance phase. Leading the charge is XRP with a stunning 45% monthly gain and a year-to-date return of 552% since July 2024. XRP hit an all-time high of $3.6, driven by regulatory clarity and growing institutional adoption following the conclusion of Ripple's SEC case. Solana has demonstrated remarkable resilience with nearly 30% monthly gains, recently hitting $200. The blockchain's high-speed transaction processing and growing DeFi ecosystem are attracting significant institutional interest. Even Dogecoin has surprised everyone with a 46% monthly gain, currently trading around $0.2456. Market analysts are increasingly discussing the possibility of Dogecoin reaching $1, which would represent a 307% increase from current levels. But the real story is Ethereum's institutional adoption surge. Ethereum has experienced a remarkable 60% price surge over the past month, reaching 6-month highs around $3,800, driven by unprecedented institutional demand. Ethereum ETFs recorded extraordinary inflows of $3 billion in July 2025 alone, with a single-day record of $726 million in net inflows on July 17th. This demonstrates the scale of institutional interest moving beyond Bitcoin. Bitwise has projected that Ethereum could see $20 billion in institutional inflows, with demand potentially outpacing supply by a 7-to-1 ratio. This supply-demand imbalance could drive significant price appreciation toward $4,000 and potentially $6,000 to $15,000 by year-end. Companies are now adding Ethereum to their balance sheets, following MicroStrategy's Bitcoin strategy. Ethereum's staking capabilities provide yield generation opportunities that Bitcoin cannot offer, making it attractive for corporate treasuries. For altcoin trading, watch XRP for continuation above $3.50, targeting $4 to $4.50. Solana on dips to $180 to $185, targeting $220 to $250, and Dogecoin speculatively on dips to $0.22, targeting $0.30 to $0.35. Let me wrap this up with the key takeaways and what you need to watch for. Let's bring this all together. We're witnessing a convergence of regulatory clarity, institutional adoption, and technical momentum that's creating a potentially explosive environment for cryptocurrency markets. The Genius Act represents a watershed moment for crypto legitimacy. The $4 trillion market cap demonstrates sector maturation, and altcoin season is providing opportunities beyond Bitcoin. However, the $3.1 billion in security losses reminds us that risk management remains crucial. For the coming week, Bitcoin's $120,000 resistance level is your key catalyst. A successful breakout could trigger a rally toward $130,000 and beyond, while failure could result in a healthy correction that sets up the next leg higher. Remember, position sizing should be conservative with no single position exceeding 5% of portfolio value. The volatility remains elevated, but the underlying fundamentals are stronger than ever. If this analysis helped you understand the current crypto landscape, please subscribe to Bonus Life and hit that notification bell. We're tracking these markets daily and will keep you updated on all major developments. Drop a comment below with your thoughts on altcoin season and whether you think Bitcoin will break $120,000. This week, I read every comment and often feature the best insights in future videos. Check out our previous crypto analysis videos for more in-depth technical analysis, and don't forget to follow us on social media for real-time market updates. Until next time, this is Boni, reminding you to stay informed, trade responsibly, and keep building your financial future. I wish you a wonderful and profitable weekend. See you in the next episode.